Hello everyone, welcome back to Upside Down Data. Today I want to talk about ZIL and what our risk indicator is making of its recent price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So what I'm showing you here is the price history of ZIL across time. If you're returning to the channel, you're quite familiar with these types of graphs, color-coded to the output of our risk model, the upside-downside potential indicator. Higher scores are higher risk, lower scores are lower risk. And the price is on a logarithmic form here. And what you can see is the UDPI does a good job of identifying these high risk points in ZIL's history where corrections have fallen off of it, as well as these low risk zones that have preceded rallies to the upside. So ZIL is kind of an interesting asset. It's one that people have a lot of hopes for, or people have had a lot of hopes for. A lot of people got in, and I think people had been quite pleased with it going into the spring of 2021. It performed quite well and was actually one of the earlier assets to really run to the upside, along with Bitcoin. A lot of altcoins waited quite a bit longer than ZIL to make their big pushes to the upside. But more recently, I think people have been somewhat disappointed with ZIL's price action because we've been in this kind of overall downtrend, right? Setting in higher highs and lower highs and lower lows, which is not a great thing. Does not suggest a lot of confidence in the market, especially when other competing layer 1 blockchains were able to put in higher highs from the spring. For example, think about, Avalanche or Solana or assets like that. And one of the things that's interesting about the UDPI through this point, I should note I'm showing the long-term UDPI that cares about moves that play out over kind of months to years, so more of a broader, more macro type of risk. You'll see that it actually identified the fall as being a pretty high risk point for ZIL, being up around the level of 3 here at its point here, suggesting that this was probably a good time to be distributing ZIL, that ZIL was kind of unlikely to be able to keep on realizing upside potential from here and was likely to correct. And so it's kind of remarkable as I'm able to identify this kind of lower high as being higher risk as a point to be getting concerned. And indeed, it didn't flip into the green zone until much more recently as we put in this kind of lower low relative to the summer. And so we can see that if we look at the raw output here. So this is the raw output, -5 to 5 on the risk across time. So you can see, ZIL eating up a lot of upside potential going into the spring, but then coming out of the summer, it got up to the same kind of level that's offered or acted as resistance in the past, this around the 3 level here, and then it got rejected as it has in the past and then came back down. And so really suggesting that this is a time to be starting to get concerned about ZIL, that its upside potential is starting to get exhausted. It was probably going to correct, and indeed that's what's happened. Now, one of the things that's interesting to note is that there is potentially some sort of bullish divergence happening between price and the UDPI. You'll see that we're setting in potentially a higher low here on the UDPI while setting in a lower low on price. And what that could mean is that even though ZIL has more realistic downside potential to come here, it's not having to potentially realize as much of that before finding a bottom as it did in the summer. So even though the price is going down, the momentum might be kind of weaker to some degree, that there's just not enough momentum to push it down into realizing all this downside potential to the same degree that there's more momentum pushing it down in the summer to realize more of its realistic downside potential. So that could be a sign of bullishness potentially, of that maybe then ZIL can push back up to the upside. Now, I do want to show the other time frames of the UDPI as well. So I was showing you the long term, cares about moves that play out, over months to years. Medium term is weeks to months. Short term is days to weeks. And what we can see here is that they're telling kind of a similar story to the long-term UDPI, although they're a little bit more undecided. And as you can see, ZIL, they've been moving closer up towards 0, suggesting that in the perspective of the model, ZIL is getting to a more even place on a medium-term and short-term time frame in terms of its upside versus downside potential. In the short term, there's a roughly equal upside relative to downside potential, similar with the medium term as well. Now, one thing I do want to say about interpreting these risk levels is that, one has to always do this in the context of one's thesis about the asset. And the reason I say this is that with altcoins especially smaller altcoins, we know it's a fact, it's a given that a lot of altcoins that are around right now will not be around in 5 years. A lot of them will fail. You go back to the history of crypto, that's inevitably happened, that assets, even ones that have done quite well in prior bull markets, can just completely cease to exist in the subsequent bear market that follows. And so whenever you're interpreting risk on these more risky altcoins, you always have to do it from that perspective. You know, do you think the asset's going to be able to survive for the next 10 years? And if not, then risk levels look different from that perspective versus if you think the asset's going to trend up with time, start setting in new all-time highs before too long, etc. So that's just something I think is important to keep in mind, and especially for something like ZIL, which is a smaller cap project. Just what is your kind of more macro thesis on ZIL? What's your more fundamental thesis? Do you think it's going to be able to survive and thrive, or do you think that it's going to have difficulty? If you think it's going to survive and thrive, then we're kind of getting into the levels, especially in the long-term UDPI, that have historically been quite advantageous. But if you think that ZIL is going to have a lot of challenges ahead or might just be trending towards zero, then these levels might not look all that attractive. You know, if you think something's going to zero, you know, it takes a lot more for you to be convinced to put money into it than if you think it's going to track up with time, obviously. Now, I'm not going to sit here and tell you what your thesis should be on ZIL. I'll let you come up with your own perspective on that based on the evidence that you see or the research that you've done. But just something that's important to keep in mind when you're interpreting these risk indicators. That if you have a bullish thesis, then seeing this as being a potential accumulation zone looks a lot more favorable than if you have a bearish thesis, in which case you might expect this downside potential to come into play, and then in fact you might just expect it to ultimately go to zero, in which case you're gonna it's gonna be a lot. It's gonna take a lot more probably to convince someone bearish on an asset to ever put money into it. So just something I just wanted to put out there as just something to keep in mind when interpreting these levels. So to give the exact levels for ZIL right now, we can see that the long term is sitting at negative 2.13, medium term at negative 0.69, and short term negative 0.19. So again, these are becoming more undecided. Essentially, in the medium term and the short term, the model thinks that there's a decent amount of realistic upside versus downside potential that could materialize. Whereas in the long term, it's still quite thinking there's quite a bit more upside potential that's realistic than downside. But again, if you have a bearish thesis, you might expect this to be much more in play than this. If you have a bullish thesis, you might expect this to be more in play than this. And so again, the way you interpret these levels will depend on what your broader thesis is. You know, with an asset like Bitcoin or with Ethereum, you know, those we can be quite confident they're going to survive any kind of bear market that's going to come after now. But with these more risky ones, it's always something that you have to keep in mind about whether or not it will be able to survive in the long term. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.